Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on ADD. We're big into celebs and I want my celebrity lecture.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey, welcome to Laughing Stock, everybody. Johnny, how are you?
Yeah, I'm good. Happy holidays.
You as well? It's been a
We have
minute.
been,
Sorry, guys. We've just been busy, holidays, all that. I hope everybody had a nice Christmas. If you celebrate, and Hanukkah now for everybody who's celebrating Hanukkah.
Yeah, we I didn't stream on Thursday. I was like, "Oh, no, I'm gonna chill a bit in the holiday." So that was the reason. But we are back here today, and I haven't been chilling. I spent the time instead of streaming to I'm currently working on a couple of sheets, but like we have said in the past, the main thing I spend my time on now is to just read up and watch a lot of different things and try to improve on swing trading and set myself up with the type of preparations that I need to make some trades work. I haven't traded this week at all. I decided to step back a bit because actually we talked a bit now before the stream, right? That some of the picks have ended up pretty well anyways, but I got stopped out too early, So that's something I identified quick and that I want to work on before I play with some real money again, I think.
Yeah, I have been trading, and with mixed results. I was up quite a bit. I named the stream II, or it's AI, but either way, point being is that whole play between them and all the quantum stocks has done really well, and real happy with myself because I killed it and then I lost it all doing stupid things and trying. Don't get me wrong, I'm still trying things. I'm not even down, so I should be pretty happy, because even with me doing really stupid stuff and playing around and seeing if things will work when they should or shouldn't. My goal at this point, and we were just talking before the stream about this, is I'm trying to lessen the amount of things I'm going into. I'm going to increase my stop loss a little bit with the goal of essentially, it's going to be basically the same amount I'm risking each day, percentage-wise, which is around 1% of the portfolio. But the goal being that by going into less things, I should get stopped out less, because my picks are very good. A lot of them tend to be runners that are going to work out. But the problem is I'm getting stopped out. And there's nothing you can do. It's not, I'm getting them on the breakouts. It's just stuff pulls back. You get shook out. So it's trying to help myself without getting shook out of things. Part of it will be adapting more call emojis like lows of the day on the opening lows. That will definitely be part of the strategy. And you know, I haven't done too much in terms of going through and seeing if it would be better to take smaller positions. The problem with the smaller positions is you risk a decent amount, and your returns then are also smaller too. As you take smaller position sizes, obviously your returns will be smaller. So I got to do some more on the math on that and see if it's worth always scaling back your positions. Now, don't get me wrong. If the ADR or whatever percentage I would lose if I go in on something because it's already up too much, that will stop me from even going in on it. It makes no sense. There's, you know, let's say there's anywhere from 10 to 20 stocks during the day that are the top movers. Out of those 10 or 20, you should be able to find one that fits the category of it's trending, it's moving up, it looks good, it's breaking out, it's got good volume, all those things, but also hasn't gone up so much that if you do end up going with low of the day, that you would lose like some stupid amount. You know, like don't go with that one. There's got to be 2 or 3 other ones that if you get in, the amount that you would lose is small enough that it's like you're happy to get in there, because if it does go and hit your stop loss, which is the low of the day essentially, you know, it is what it is. And number one, probably not a great momentum stock because it shouldn't be pulling back quite that much. But as always, I mean, we've been talking about it too. You know, the more I get into the momentum trading, we were talking about how much the fundamentals actually matter, because it's like the names that you see that are just skyrocketing are just usually garbage, and it's definitely all narrative based. It's really hard to go off. You can go off future guidance. That's probably the most if you're really looking at the fundamentals. But like looking at past history, it's tough. A lot of them don't have it. It's all like, you know, next year this is our projection, or you know, or they just come out and say like, you know, we're going to start building quantum computers, and all of a sudden everyone's buy. You know, it's not that they have any proof of concept or anything. And I know this is how bubbles and stuff form, but that's why if you're going to do more of this style, it's really important that you do have a stop loss, regardless of what it is, to make sure that you're hedging how much you're risking essentially. So the portfolio, just to pull it up, I'm just in a few names right now. Overall, the week and month, I'm down almost 1% for the month, and about 0.5% for this week. So I mean, nothing. It's pretty small in terms of this. For instance, 2 weeks ago I was up 27%. So I've lost 7% now here in 2 weeks. So last week was a dumb week for me. I was up and then lost it all. Actually, it was like the same week. I gained it all and then lost it all because I was trying dumb things. Which, I say dumb, it wasn't dumb at the time. I was learning. I was trying different things. You know, I've learned that didn't work. Whatever, you know, the things I was trying, playing with stop losses, playing with what kind of stocks I'm getting in on, and that kind of thing. So it just kind of is what it is. Yeah, you have to kind of play around with these things. It just teaches you. It's really invaluable. But the main thing that matters to me is, even though I'm technically risking all those things, it's calculated that if it doesn't go well, it's okay. Like I said, I'm only down 0.5% and I'm down 1% for the month. That's okay. It's not a big deal if you're down that little bit. What I learned during that time period is invaluable, and going forward, it should really improve my returns. You know, we're just doing the math going forward. You know, the goal I really think you should be is to shoot for anywhere from 4 to 5% during a week. 3%'s, you know, great as well. 2%'s good. 1%'s okay. But if you're really looking to get outsized returns, you really should be shooting for those numbers. It doesn't have to be all in 1 week. It can be over time. But the idea would be that, you know, you're getting 4 to 5% on most of the stocks that you're in, on average. And then if you set your stop loss at a certain amount, you obviously have to subtract that and make sure that you're covering that on top of getting the 4 or 5%. You know, these are ones I got in successfully. Part of the reason why I want to start adjusting things is because, like I was saying, I've done really well at picking good stocks. You know, they tend to run afterwards, but it's just getting stopped out of them. So I just got to adjust that a little bit, just so I can stick in some of these names. It's frustrating to pick 3 or 4 names get stopped out, and by the end of the day, they're all up 20, 30, 40%. So it's like you're picking the right ones, but you're not able to hold it. And then don't get me wrong, the week that I did really well, I got lucky because, like I said, I got 4 or 5 stocks on one of my days. All of them stayed in, and all of them went up like 30% a day. So there is times where even if I was doing what I was previously doing, would be very successful. But it's like I said, it's just fine tuning the process. Maybe I'll find going forward when I try this style, I'll go back to keeping my smaller stop loss and just dealing with it. But and then the only other thing is I might adjust position sizing. I usually go about 10% in on any given stock. That's about my average, but and it would be scaling it down, not up, or most likely not up. I tend to not want to put too much risk on because then your stop losses have to be even tighter, which is I don't know how I feel about that. And you said you've been working on new sheets, right?
Yeah, I'm building one for my portfolio where the portfolios are a bit tricky because I don't want to reveal any personal information or anything like that. But I have now everything set up as a percentage. So I'm working on that one, and then I'm building another one, like a little bit of a different tracker system that I need to test out if it works. But yeah, so I've spent some time doing those, and hopefully they will help me moving forward. But I've also watched a little bit on YouTube. I've read a little bit, and I spoke with you yesterday, and I mentioned some of the tickers that have performed pretty well after I got stopped out, right?
Right.
So I'm experiencing so far a little bit of the same problem, you are talking about with I'm getting too easily stopped out, and then they spend another week or so, and then they run up,
Right.
So but that's good. The good thing about this is I guess maybe it would have been obvious to you anyways, but when you track things, you can at least monitor how much a stock is up after you sold out as well, stuff like that, so I think it's important to document every trade you take and note down just some simple ideas and thoughts, and keep tracking them often, and then you can pay attention to mistakes you have done and stuff you have done right, and it's easily noticeable after that.
Yeah, no, I agree. And if I had all day to sit here, like if I could essentially like not day trade, but like watch it like a day trader. Sorry guys, I got a little bit of a cold here. That lovely time of the year. But if I was really able to sit here and watch and monitor the charts, it would be different because then I'd probably be able to catch the breakouts really close to when they actually do. But I don't have that luxury, If I was home and had all these, multiple screens and stuff, and I could have different charts up and all that, it would be great. Usually I'm peeking at my phone and seeing like an alert that went off, and then trying to log in quick and put an order in. So it's obviously not the most prettiest of setups, and it's something you just kind of have to accept, until I get to the point where either this is returning enough or I don't have to work full time, then there's not much you can do. I mean, I think there's like this fantasy in people's heads that you can day trade and make a living off of it. And to be honest, even if you're day trading or whatever you're doing, swing trading, doesn't matter. If you're going to try and make a living off of it, like you have to have a large account.
Yeah.
I mean, you got to have a couple $100,000 at least to successfully pay for everything else with your day trading account or whatever it is.
Yeah.
So, someone who thinks that you're going to go out there with like 10 grand in an account and somehow live off that, no, you're not. You're gonna kill yourself because you're trying to make so much money so fast just to stay, afloat of your bills and all that. Like it's impossible. So
yeah, that just adds a lot of pressure to it. And like you said, it's tricky, and for me maybe a bit more easy because of the time differences and all that stuff. But I struggle because sometimes when I when I finish work, I come home and I have things I have to do, so I can't sit at the computer. Even still, I can't
Right.
even turn it on.
Right.
And other times it's like I can sit down and actually be at the computer at the opening hour. So I also struggle to find like a good routine for me to be able to participate in as many days that I can for this to work out, because that's also important. So you just need to, I think you need to work on that. It's like you said, it is how it is, and you're not going to be able to change it anytime soon. Because to be able to live off this, you need a lot of money in your account already, and if you're gonna make those money trading, you need a lot of success over a few years, so you just need to find a way to make this work. I think that's just the reality.
Right. And and like I said, it's not such a big deal because most of my money goes into other accounts, which are just pretty much follow regular index type stuff.
Yeah.
So that's where a majority of my funds are. So they've been returning fine. The market's done
Yeah.
ridiculous. Even this year with some of the pullbacks, what's the S&P up? It's still up like 25% for the year, isn't it?
Yeah.
I mean, it's something stupid. Yeah, 26% right now, almost 27. So I mean, still, I mean that's crazy. And I know historically that's towards the highs, but I mean we've had back-to-back years of this. That's
Yeah.
not very common. And while 2022 was a down year, 2021 was the same thing. 2020 was almost 20%,
Yeah.
31% in 2019. So even with COVID going on, I mean, and 2022 being a really rough year, just crazy. I mean, these returns are insane right now.
Yeah.
Yeah, I mean, you go back and look. There is periods. The '90s were another time leading up to the 2000 bubble. Um, but usually it's more volatile. Usually you'll get like one or two really good years, one or two really bad years, and it's a lot more choppy. Um,
Yeah.
not, I mean, this is rare that you have the past like so many years here that the S&P is just murdering it.
Yeah.
Which I've been listening to podcasts. They do talk about how a lot of it's probably the passive returns because so many people, especially in the states now, it's just like why not invest in just like an index fund. Now don't get me wrong, I do have some small strategies in terms of when to get out, and that would be on a really big market downturn. Um, um, which I don't recommend. This is not financial advice. Don't do that. Listen to your fiduciary or whatever your investor, whoever your financial advisor is tells you to do, which will most likely be just stay in and don't touch it. Um, that's really sound advice. But either way, I mean, me being young, I'm okay. I mean, younger, thank you. But I'm gonna sometimes. I'm not holding through a 50% downturn. No way. I'm not doing that.
Yeah. No.
I'm not that stubborn. But in terms of, so I don't know. Do you want to go through some charts and see if anything's moving, or you have any tickers that you've
Yeah,
been
we
looking
can
at?
go. No, not really. I just saw like hold on, let me check here. Well, the quantum names are still a bit crazy right now, right?
Yeah, but like I feel like like QSI. I know is one that was like killing it. But like, is there anything on these?
No, I saw Value posted like an article about one of them being a complete scam, right?
Wow, there's definitely gonna be scams. Yeah, you gotta. That's one thing you always have to be cognizant of.
Yeah.
Yeah, I mean, in terms of the value side, it's actually, I mean, it's not that all that crazy different because honestly, the things I'm looking at now is like I said, it's looking at future guidance, it's looking at it's kind of simple balance sheet stuff. Like at most, like yeah, you can sit there and fine tune and nitpick numbers. And if you're looking at like big wonderful businesses, that's a good idea because you want to make sure that they're steadily increasing their returns above a certain percentage. I mean that's really how you should be value investing, or even growth investing for that matter, because growth investors even care more about the guidance and the future growth prospects. But you should be looking at cash balance sheets, like making sure that these guys have cash and it's not just all riddled with debt. Because the one thing I will say about this kind of investing or trading, I should say, is that a lot of times you'll skip out on the ones that don't have a balance sheet or anything like that, because the chart they're not gonna be bouncing back. They're already the chart will be ugly. They'll have already been a turnaround by the time I'm looking at it, because it'll already have come back up for a little bit, and then you can assess from there if you think it's worth getting in. But like most of these, if you're looking at cash flows and stuff like that, I mean they've never produced cash, never.
Yeah.
Look at the revenues. QSI, its revenues is $2 million. It's like nothing. It's like a joke.
Yeah.
But it has excess cash. But the one thing it has going for it is the risk profile is okay, because it doesn't have a ton of debt. It's the one thing it's got, and it hasn't. I mean, besides the initial dilution, it hasn't diluted in a while. So I mean, do I really need to pull up the fundamentals for a lot of these companies to figure that out? No, I don't. It's sure, it's good to know, but to be honest, the bigger things going on Seeking or something like that, and just kind of reading up on it, I'll get a lot more from here than I will from looking at the previous fundamentals for most of these companies.
Yeah. I see a lot of battery stocks are up.
What is this?
What are
Wow,
you
did you see
looking
this? I didn't know Seeking Alpha has it. They have AI now that will generate a report.
I haven't seen that.
Wow, look at that. That's pretty cool. It's probably very generic. It probably doesn't really help you.
No. But
Imagine this though. This gets really good, and like I
Yeah,
feel bad
exactly.
because all these analysts who spend all this time, and they're just gonna get AI will just do it for them.
yeah.
That's crazy. Wow, look, like this isn't bad though. Like look at this valuation. QSI trades at significantly undervalued level with an EV to sales of 1.33, which is 64% cheaper than the sector median of 3.65. Similarly, the price to book ratio of 0.8 indicates a 62% discount compared to the sector, suggesting attractive valuation. And it's funny because like I was just saying, I was like, really the only thing this has is it has cash. I mean, this thing has a bunch of cash on it, so right now the book value is not bad. It's cheap on a book value metrics, which whatever. I get it. You can say that that's bullshit, which is pretty much what we were just saying. But still, at least it's not going to go bankrupt tomorrow. And it says despite a remarkable year-over-year revenue growth of 232%, mind you, we're going from 1 million to 2 million, so it's not like you hear 230% revenue increase and you're like, wow, that's crazy. Yeah, if it was a bigger company, make it, if it went from like, 10 million to 20 or 50 to 100, those are bigger numbers in terms of not paying attention to percent. But going from under 1 million to 2 million, don't get me wrong, it's not bad, but it's like, it just doesn't, it holds a little bit less.
Yeah.
EBITDA margin of minus 4,000%. This should show you also too, like what you're dealing with here. But that's what I'm saying. Like I can read all this, but like, do I really need to? I can get that from looking at the balance sheet in 2 seconds.
Yeah. I think so too.
And then I'd rather read in here and actually see the people who understand the business a little better, because I mean, what is this? It's like biotech. It's like biotech with AI. Is that what's going on here? I mean, it's kind of a wild. What does the business actually say? It's designed and developed the hardware, consumable, and software solution to provide a solution for protein detection analysis. So it's some software that detects protein and analyzes it better. Which great for scientists and all that, but proof of concept is a little bit of ways away in terms of how useful this is and how much this would sell. Don't get me wrong, it might be the greatest thing ever, and scientists might like it, and this all of a sudden gets bought for every lab across like the world. But I don't know. Without going through and actually reading this, I'm not going to sit here and kill myself to read through. He said another reason to wait is the improvement in the AI software. So, they're trying to speed things up and use AI to better perform, essentially. Yeah, this is true. It's got quantum in the name. You want to know why things take off? It's got quantum. Put that in your name right now, and it's no different than saying AI a year ago. Say quantum now, and you're good.
Imagine the names with both.
Quantum AI. That's what I would name my company right now if I came out. Is that a company? It probably already is.
It probably is.
I don't know how to spell quantum. Private. It's already bought.
Yeah, of course.
Someone already bought the name because they know it's so great.
Yeah.
Mark my words, that'll become public, and it's going to IPO at some stupid amount.
Yeah.
And the other thing too is I'm just looking at the top loser names here, and Lemonade, Wolf, Piton, these are all names, Beam, that were momentum stocks at one point then, and they pull back. And I know this could be just a day, so it's not really a big deal. But my point being is that a lot of these names, these moves they're pretty quick. I mean, some of them are worth holding for a while, just because they tend to they're doing that stare approach, and it might last for 2 or 3 of those. And if you hold through that entire time period, you can get some serious returns on some of these things in a relatively short amount of time. I mean, you think about it, you get a 2 or 3 bagger in the course of a month or two on a 10% position. That can make for a strong year for you. Another one of the stocks that kind of killed me the other day was Hour. Hour would have worked for me too, which is the worst part. And I just something. So when I was doing it the one day, it just didn't. I got in here. I was about to buy it at 205, and for some reason, the internet stalled out on me, so I didn't get in. And then the next time I looked, it was up to 230. So I was it's already jumped up too much. I won't go in because of the stop loss issue. And then this thing returns. By the end of the day, it was up 200%. But at one point, it was up 300% in the day, and I would have caught almost that entire move because when I was getting into it, it was only up 20%. Or not even that. I think it was at 15% or something, and then it jumped over 20%. That's why I didn't get in. So that's what I'm saying. If I had just had a low of the day as my stop and gotten in on this, I mean, I don't know about you guys, but if I'm in a stock with a 10% position and I see it's up over 300%, I'm probably going to just sell that day. It's not very often that you're going to get that kind of jump in a day. And who knows, maybe this continued to take off. I find it rare that a stock goes up 300% and then continues to do it. The only one that's happened, I think, so far this year has been, was it Drug? They make they were talking about things using mushrooms in medicine or something like that. Drug or Mind or one of those ones.
Yeah.
I can't remember what the stock was. Was that the ticker? Yes.
If it is Drug, it holds up pretty well at least.
This was the rare one. It was up 130 and then up 1,400%. Oh my God. So maybe I'll sell 50% and hold the other 50% because. I mean, you imagine that? I mean, what is that on a 10% return? Let's say you put $1,000 into a stock and it's up 1,400%.
How do you catch this?
That doesn't even make sense to me. Is that right? Well, either way, you'd turn $1,000 into $14,000 if you had just held it for the day. I mean, imagine you put in 100,000 or something on one of these. I don't know if you'd have the balls to hold that all day. But my point being is catching any of these kind of moves and if something even jumps and you let's say you got out around here at half of it, is anyone gonna judge you on that? Don't get me wrong, I'm not trying to day trade here, but on some of these stocks, if you get in on one of these huge momentum moves, I'm not gonna sell. If I see that, if I check it midday and realize I'm up that much, I'm gonna probably trim. It's hard not to. And I know I said I wouldn't do that, but this is just you're not going to see these kind of moves very often. It's super rare that you'll get that kind of return. And I mean, the crazy thing is, if you had just held here, I mean, what is this? This day it was up another. It was almost double that. So it would have been a 2,800%. I mean, or 2,800%. These are insane amounts, and all it takes is catching even one of these through the year, and it would make your entire year. I mean, you think about it. So if it was a 10% position, let's say I caught just the one day, so that would be 14. Yeah, that means your account's up 140%. Is that right? In a day? Your yearly return becomes 140% one day?
I think if you could just
You could probably slow down at that point for the year.
yeah, that's what I was you can just sit back and relax a bit then.
But my point being is, like, that's what you're trying to look for, is just to find just a few of these, and as long as you set your stop at like a good low of the day, I mean, you could get real crazy on one of these and hold through.
Yeah.
And I mean, imagine even if you had just done the 10-day moving average, you still would have ended up at 45, which is still, I mean, that's a crazy return over the course of 2 weeks. The first time it ended down was over here, and there's all these opportunities to get out. I mean, it's wild. Now, and like I said, this is super rare. There's one or two of these probably a year at most. But my point being is, I remember watching this on that day, and you could have got in on any of these spots. And with my strategy now, this is a stock that immediately becomes contender. Like, don't be afraid to get in on this one. All right, what else is going on here? Let's go back to the dashboard. I didn't really. So Friday was kind of a down day, which I was actually up. I say I was down. I was up over 1% at the end of Thursday. So Friday was an ugly day for me. I got stopped out of, I think, 4 different names. So
Yeah.
kind of sucks, but whatever. It's not the end of the world. Like I said, you're up and down 1% all the time. And these names that I'm in right now, I'm happy. I'm happy that I'm in them. But I mean, you just kind of see regular stuff pull back. I didn't really see anything up. I mean, besides some of the quantities. What's going on with natural gas? Is that right?
Yeah, I saw that earlier in your sheet. Let me check what I have. Which one are you using? UNL?
Yeah, I think my percentage is wrong there.
Yeah, mine is just 1.54.
Yeah, I don't know why that says 17. Something's off with those numbers.
Yeah.
It might not have up. Sometimes it doesn't update. It looks like it could, maybe it. I haven't checked it in a minute, so it could have been one of these up days that it stalled out on. I don't know. I get weird things sometimes with it. But yeah, I see 17%. And I'm like, how is that up 17%? That's kind of strange for a commodity. A commodity shouldn't be up 17% ever.
No.
Like that, they're gonna limit plus that no matter what. They're not gonna. But yeah, I mean, everything was down. So I guess that's the theme going forward. And this happened to me too. That week that everything was doing so well, we had 2 days that were a pullback, and all of a sudden it started looking like we were gonna, start to get into a correction. I'm paying attention to all this news online. I'm paying attention to, people on X and everything like that. And it got to the point where I'm like, all of a sudden I became bearish and sold out of a bunch of names that I didn't hold until the 10-day moving average, just assuming they were all going to pull back. And the next day, everything flew up. Everything flew up, and I had just sold out everything. So I'm also like, I listen to, you hear Qualmaji and some of these other guys, Mark, Minaveri, and and they say like just don't listen to the noise. Like no one knows what they're talking about. O'Neill says it too. He's like they're going to tell you it's going to do this, and these people don't know what they're talking about. They just talk. And you know, there's like 1 or 2 days that something looks like it's trending, and the trend can end. So never assume that just because. And then the next day, everyone was talking about how great the Trump economy is going to be. So like. I just have learned that like really don't pay attention. See what happens. The charts will tell you if something's going up or down. That's as simple
Remember
as that.
the author of How I Made $2 Million in Stock Market? He moved away from USA on purpose because he wanted to escape all the noise.
Yeah, because it's just constant. It's constant. And like, you know, like one of the worst things I can do is log on to Yahoo Finance because even though I like to use it, I have a screener on there I like to use. But at the same time too, like I try not to even look at the homepage because it's all just dumb nonsense. It's just the whole thing's just a waste. Like all those analysts, everybody in their news should just all be fired. Just get rid of them all. Save a ton of money. Just provide data. You'd be a better website and you'd save a ton of money. Yahoo would be much better off.
Yeah.
Because it's all just them talking about nonsense. Sure, the Federal Reserve and the rate, if you want to worry about that stuff, because I mean, in the long run, yes, that will affect things. But even that, I mean that. You know, he drops the interest rate and all of a sudden the stocks move a little bit that day in one direction or not, and then it just becomes noise. Like in the grand scheme, how much did it really change things? For maybe some financial type things, it'll matter in the long run, and you'll see those. But like overall, it's just noise. There's so much just nonsense out there to listen to.
Yeah.
Bitcoin's at 94.
Yeah, it dropped a bit, but Tesla looks strong still. I think it was down 5% Friday, but you know.
Yeah, I mean had a great run up. I mean, you know, it's doing the stare.
Yeah.
This would have been an easy swing trade.
Yeah, I know. That chart looks strong, and of course Tesla.
And I mean, you know, to be honest, I feel like once you get to like a decent size, if you're going to swing trade, you almost have to do one of these big companies like Tesla that's, you know, when it returns, it does really well because this is one you could buy a ton of volume on and you could ride this up. You know what I mean?
Yeah.
And not feel like you're going to get stopped out right away because, you know, it doesn't make huge moves ADR wise. You know,
No, it doesn't.
there's just too much volume. No one can push this in any one direction. You know, some of the stuff that you and I look at that's like, you know, sub-billion-dollar market cap, anybody can come in there and move those prices. But, you know, when you get to something this large, you know, $1 trillion market cap, you know,
Yeah.
no one's putting $100 billion into this in one day, you know. But yeah, I mean, it does look good.
Yeah, if we zoom out a bit also and compare it to the high in November 21, it's like it's still above that point, and it seems like it's gonna hang there for a little bit, and who knows? Probably gonna even break new highs again, right?
Yeah, I mean, this is bull. I mean, to be honest, I didn't even notice that.
Yeah.
I was thinking it was still down from the highs because I remember I'm thinking before the stock splits.
Yeah.
But yeah, you're not kidding. This got back up to 500. Wow. You know, it's funny too because you know, I don't want to get political, but because the left hates Elon Musk now because he's kind of turned on to the Trump team.
Yeah.
Like you only hear negative news about him, you know, like unless you're on X. X is the only thing, obviously, and he owns it, so whatever you want to say about that. But like all you hear about Elon Musk is just terrible. It's that he's a terrible person, even though he's doing everything in the world to try and, you know, make these fantastic businesses and all that. The left in this country specifically just hates the guy. So it's crazy to me because like all I usually hear about Elon's terrible. I hear Tesla's terrible. Everything's terrible. And then I come here and look at this. And I'm like, what is going on? Who's saying this is terrible right now? Like obviously what's really going on is people love it. People love Tesla. That's what
That's
this
the
shows.
thing. I had a friend who said like, after the last earnings report, Tesla got a little bit of a stick. It was also down, even though the display with the robots and all that looked pretty cool, right? And then it has just skyrocketed up again. And I had a friend in that time period who said like, "Oh, it's not going so well for Musk these days." And I'm like, well, did you see that launch, the rocket launch? That looked pretty successful to me. And Tesla is they beat earnings, and after that has gone up a lot. So it's like, yeah, it's definitely a narrative. And even people here who own Tesla cars, they after the election now, I've heard some of them like they want to sell their cars and stuff because they want to like take some distance from Musk. It's just.
Yeah, but don't you, I don't know. I think that's just such a ridiculous thing to care about.
It's a lot of we all get influenced by news, right?
Right.
That's
Well,
what it
that's the
is.
thing.
Yeah.
But yeah, I mean, and like you said, I mean, you can argue. I think X is one of the fastest growing social media platforms. Which, the one thing I will say about X is when I log on X is the only social media platform that I see just as much stuff upvoted from the left and the right in this country, which actually makes me think it is probably the most legit one because it's funny. I go on Reddit now. Reddit's the worst echo chamber I've ever seen politically. It's
Yeah.
I just delete it all because I don't care. I don't want to see any of it. But
Yeah.
it's just brutal how some of these ones only are so one-sided. It's really crazy to watch actually.
I think I didn't use Twitter for ages, but I started to use it before Musk bought it. Um,
Same.
but before that, I had no interest in Twitter. But after I started to use it in the stock world, I find it valuable. You of course, like we have done with Seeking Alpha authors and stuff like that, you need to follow accounts that you think are doing well and try to eliminate as much noise as you can. But
Yeah.
I also discovered like you can put in keywords that you want to mute in your news feed. So if it's like something that you don't like, you can also filter the news a bit, So I've started to like X a lot, to be honest. Not that I'm not saying that I'm using it and gets heaps of value from it, but in lack of other alternatives, I think it's a good platform.
No, I agree, and just in terms of for financial news, I
Yeah.
still anybody who I actually really appreciate their opinion is on X. That's really where I go for it. And like you said, I'm the same way. Anytime they send me stuff that's either political or just kind of nonsense, I just mute it and block it as much as I can.
Yeah.
It's kind of a losing battle. I feel like
Yeah.
every day there's something else that they're trying to throw at me, but whatever. Um, I honestly don't use it all that much. I do, but I don't at the same time.
Yeah. No, I think we are very similar in that way. But what else are you going to use? I'm not using Facebook for this or Instagram. Not TikTok. I'm not on TikTok. So X is the one for me.
Yeah, no, I think just the way X is set up, it makes the most sense.
Yeah.
Yeah, I'm definitely not using Facebook.
No.
And that's like, I mean, I barely go on Facebook anyways. I check stuff for family and things like that. That's what I use
Yeah.
Facebook
Yeah.
for. And I don't have any of
But
the
like
other
you
ones because
said,
the other ones it's so much like nonsense. I'm like everybody else. If I have like Instagram, I'll just start scrolling, and then I'll be like, get off your phone, like stop
yeah.
wasting time.
Yeah.
So I delete all of it. So the only thing I have right now is X and Reddit. And Reddit to me has kind of become, it's kind of annoying. Like I used to like, I like going on Wall Street Bets now and stuff. But even Wall Street Bets has got kind of like, I don't know. It's like it seems like it's become less and less valuable in time. Well, you used to be able to really at least judge sentiment while on Wall Street Bets, and I find that now it's I guess maybe because the meme trade hasn't been there for a little bit.
Yeah.
Like you said, what's his name? Roaring Kitty has been, he posted a few times, and like GameStop's one of those names. Like I saw GameStop trending yesterday or whatever it was up like 10%. But then by the end of the day, what did it close down? I mean, and don't get me
Yeah.
wrong, it's up in general. No, not gamer. You know, it has been trending up, but like a lot of these days, it's you know, it's up and then it's down, and it's like it's not really much of a momentum stock, even though it has had some of these runs. But I don't think we're going to see this anymore, because after Arcade did this one, I think that kind of killed it.
Yeah, he followed also up with the stream, and it was like, we had some questions after that, you know. He kind of just, I think that was his way to show everyone that he's still fine, that he's very happy where he is right now, and that he probably won't be doing any more streams. And it kind of ended it a bit, right?
Yeah, no, that was definitely became somewhat of a farewell.
Yeah, I think so. And I'm not blaming him or anything like that. I love the guy, but I just found that period was a bit different than what we learned from his initial streams. It was a little bit of a different strategy. He's evolving according to his situation, you know.
Yeah, and I mean, you know, he still does he still does some real ballsy option plays, which is
Yeah.
you know, yeah, it's just not for me. I'm not trying to do options like that. The risk for me, I get how he manages it. I actually think it's pretty brilliant, but
Yeah.
I'm not doing that.
No.
Um,
But yeah, he posted something, right, and it didn't have so strong effect now. And who are like, it's very hard to try to interpret his tweets now.
yeah, oh yeah.
I'm not gonna.
I think it's purposely
Yeah,
cryptic, you know.
and he needs to be careful. I'm sure he, you know, on the stream they halted the stock and all that stuff when he said certain things.
Yeah, but I don't even think he's. I mean, is he in GameStop right now? What are the tweets he's been posting? I haven't noticed.
No, yeah, that's what I'm saying though. Who knows? I think he still is, but who knows? The guy is brilliant.
He definitely knows how to get sentiment to follow him.
Yeah.
Now I'm just looking at some of these names. Like Rajetti, this is another one too that like just doesn't seem to go down.
Yeah, so when you
I've caught
talk
this move a
about,
few times, and this most recent one I did most of it. That was a big winner for me. But or no, this is only on the 1 month. It was one of these. I think it was this
yeah,
move.
you know, when you talked about GameStop, so sometimes I have referred to a page called apewisdom.io, and all the quantum names, because GameStop has fallen a lot. It's a social sentiment site,
Mm-hmm.
and Rigetti is now on 6th position there, which is pretty high, you know. And
What's the website?
I saw apewisdom.io. Yeah, that one. You can see the quantum names in the top, right?
Right.
And GME used to own this the first spot for years, but now it has fallen.
Tesla's back up.
Yeah. I think
AMD's
maybe because
popular
we
right now. Interesting.
MicroStrategy is there. Sometimes I just like to look at this quick for I'm not sure how accurate it is.
Well, I mean, these are all names that are obviously been up there. I mean, you know, I recognize every one of these names. You know, Antero,
Yeah.
Archer, Rocket Lab, Palantir,
Red Cat is there.
RVSN, Lunar, Micro,
Yeah. Big Bear.
CTM, RGTI, Cooler, or however you say this. You know, every one of those names are momentum movers right now.
Yeah.
Yeah, interesting though. Either way.
Yeah, I think GameStop was. If you go there they are.
47 now.
Yeah.
But it did move up quite a bit. I mean, it was really down.
Yeah.
Moved up 23 names. How many was this, top 100? Oh,
Now
it
you
has
can
pages.
scroll.
Wow,
So,
look at this.
yeah.
Interesting.
There's a lot of resources, right, to take the temperature of the stock market.
Yeah, right. But yeah, so like I said, I mean, there's not much moving here. I had went through and updated the movers and stuff like that. I had my watch list is kind of up to date. You know, just to go in and talk to show you guys kind of what I was talking about. So this is a 5-minute chart, and these are all the big movers from Friday. But you know, we talked about that most of these charts, if you had done something where you had gotten in on one of these, now don't get me wrong, you do miss a chunk of the move because you know where you get in on the breakout here. And there is times to enter into these things later in the day. But some of these ones where, you know, you can get in around here, and sure, it does have a pop during the day and it comes back. But some of these names, if you can get in and, you know, as long as these aren't breaking through those lows, and they trust me, they get right down to it. And we were talking about this actually, and Qualamaji says to not actually set the stop loss like a hard stop loss, just kind of, you know, mentally keep a stop loss essentially there. Because a lot of these names, they get right down to the low of the day. But like GRRR is a great one that, you know, if you had gotten in here, you know, you get stop lossed out down here, it kind of sucks. I mean, that's you know, it's a decent loss, but you know, it didn't break down. So it was one of those ones that, like, you know, it looks great, has the momentum, has the strength, and instead you would have ended the day close to even, maybe even a little bit up, as opposed to getting stopped out, you know. So it's like one of those things that, like, on a lot of these, like this is, you know, HOLO's one that you wouldn't have got out of. MPLN is another one. Outlook's another one. QSI is one you actually would have gotten stopped out of. So, like I said, it's not a perfect system. But my point being is, like, these are hedging your odds. This is 1 out of 11 stocks that didn't work. This is 2. So SES is another one. And these are ones too you can go back in. I'm not saying you can't go back in. But
what are your thoughts, Dane, on if you get a little bit of a later entry during the day? What are your thoughts? I guess it depends, right? But what are your thoughts of holding that? Let's say you enter like midday, and by the end of the day you are just up like 3, 4, 5%. Will you sell out before the close? Has that momentum died a bit in your eyes, or will you keep it over the night?
Are you talking like if I'm up, like sell the
Yeah,
whole
just
position?
in general, because we have talked about that you should do a lot of the trading in the first hour or so, right? Because a lot of things are moving.
Oh, and by the way, too, I should point out SES, the two I just said that failed it, SES and what was the other one? WIMI. These weren't even buys because it never actually broke out opening range highs. So
Yeah,
you would have you wouldn't get in on these anyways. So to be honest, all the ones that did work. So literally yesterday was a foolproof 100%. Anyone that you actually would have gotten in on would have stayed in. It wouldn't have locked you out. And then you could move to break even. But to answer your question, it depends. A lot of times, so let's say I buy into a stock, right? First off, then you're going to want to zoom out. I think this is one thing that's really important is now to zoom out. Let's look at a daily chart. So let's say I was looking at EVTL. If I had gotten in on this day here, and it's the first day that it broke out, and I had gotten in somewhere in here, that was the first time I entered. I didn't get stopped out at the low of the day. Blah blah blah. This is a big move. It's the second day of a big move and it's got growing volume. to me that means stay in it. That doesn't mean that means don't even trim it.
Yeah.
Because it should continue on. If you look at historically, I mean, that's how these things kind of run. So, and that would have been the right move. Now, sure, if you want, trim it, adjust your break even, however you want to do it. But I would hold here. And to be honest, since this volume's still growing, I think I would hold for one more day, because you'll notice that usually on the really, really high volume days, there's still a few more positive days as more people pour into these things. What did EVTL do in post after hours? It stayed even. So, you know, and people, if I see it's down like maybe like 5 or 10%, that would make me question it. Probably at opening of the following day, like 50% of the position, right there. Yeah. And then that way, and then set the rest for break even. And that way, if it does continue to run, you know, you don't get hurt in that way.
Yeah.
But right there,
So,
I mean, this is nothing. Who even knows what the volume was here after hours? It could have been nothing.
yeah, no. But
so to me,
in
that
your
looks
eyes,
kind of bullish still.
yeah. But in that case, it's like if you know about then the next day, it's a bit to understand it, because by the way, then is the stream having some issues, or?
I can't tell. It looks like you slowed down there.
No, I think it.
Yeah, nah, YouTube's saying to me it's not totally smooth, but whatever, it's fine.
Yeah, we just keep.
Sorry guys if there's lag on here right now.
Yeah, because what I was trying to ask you about was like, if you have that initial move up with volume, but then it breaks down a bit. We have talked about then that goes a bit against it being a momentum stock, but then a lot of the times we see that it just takes a little bit of time before it gets that momentum back, right?
Yeah.
But then if you enter a little bit later and it does get a small part of the momentum back, but it slows down, but you are still up just a few percent. Is that like a sign in itself that you will exit before and just take the small gain you have, or
no,
or will you?
No, I will never take a small gain just because I'm up 2% and it hasn't broken out. You could be in this period consolidated wise and you got in on one of these days. Now this one's not great because you would have gotten stopped out on this, but let's say this was moving higher lows and whatnot, and you got in one of these days. Like, I mean, this isn't a great chart because you'd have to imagine that this chunk wasn't here, but let's say it was starting to break out and this was the path of resistance here, and you got in, let's say, on a day like this, and then it kind of continues a little bit sideways. That one can still break out, so you don't want to just trim it just to trim it there. Now, if the bigger thing to focus on is, okay, so this is in this general 3-day uptrend now. It is starting to get risky here because it's not like this thing is going to probably continue to run for much longer. I mean, we have 3 large up days. It's very rare that kind of continues. You should probably be looking at trimming here. And then it depends. I mean, you want to hold all of it till a 10-day moving average, you know, breakdown or something like that. You know, that's a risk reward type thing that you want to do. But in terms of, you know, do I want to trim it at the end of the day because I'm up and I just want to take a win? Well, when did I get in? Did I get in on, you know, this day on the breakout? Did I get in on this day? Did I get in on this day? If I got in on this day, I might trim it. I might just, at the end of the day, like let's say I get in here and I don't get stopped out and I make this, whatever this is, 20, 30%, well, 30% here, so probably like 25% a day. I probably would just sell it here because I'm already 3 days into this up move.
It's a bit extended.
It's a bit extended. Now, if you get in on this day, and everything looks good to you, volume looks good, you think it's going to continue through, yeah, I think you'd be nuts to sell at the end of this day. This is the first day of a breakout.
So is this, I've seen some people use the Bollinger Band to like decide when to trim. Is that something you do?
I possibly, I'll consider it, but it just depends. I mean, you know, for instance here too, like this Bollinger Band, I mean, this is the 5-day moving average and this is just skyrocketing up. Like look back here. You know, this one, it trends and it stays just above that 5-day moving average and then it starts to move sideways here. This is a really good place to start to trim because most likely it's going to break down. And it doesn't mean that it's not going to move sideways and then go back up. But for instance, you could trim here, lock everything in, and then wait to see if it breaks out again. And if it does, then you would re-enter a new position essentially. This one doesn't work out, so you made the right choice there on getting out at that first move sideways. You know, this is one that here, if now this is really choppy in here, so I wouldn't recommend getting in. But let's say you did buy in here and you move up a few days. Now you have this big down day, so you can't avoid that, which is once again why I say if it's been up for a few days, you should probably consider trimming it. But let's say this wasn't such a big candle, or let's say it had moved up here, and now let's just ignore it. Let's just pretend these 3 candles here didn't exist and we started moving sideways. This would be a good place to probably get out because now it's starting to move sideways, it's consolidating, and then we can wait to see if there's another breakout again. It's probably going to one day break below the moving average here. Now, on some of these ones like this, like let's look at Gorilla here. This is one where it's moving up and it does trend sideways here and it pulls back, but it continues to go. So, you know, it never broke the 10-day moving average, which is why I like to hold that once you're above your initial entry. That's why you can really catch some of these moves. I mean, look at this. If you didn't sell here, you go from $6 to $18. So one thing you always have to keep in mind is you want to set rules that do keep you protected. So for instance, on this one, let's say I had bought, I mean, this is technically day 1 of an up move, and then this is day 2, this is day 3. Let's just say you sold your position on day 3. If that was a rule of yours, it pulls back and then once again starts to break out. Now this one moves sideways. It doesn't have any up days, so I wouldn't really count this as like, you know, I wouldn't count these as extra days in this move. And then on this would be the 3rd day move, and you could once again cut there. Now you do get screwed because you miss a lot of this, but at the same time too, if you do this more consistent, this is rare that it runs up like this. This is not rare where it bounces around. So you have to think, what do you want to hedge your odds with? You want to hedge your odds and assume that it's going to be like this, or you always want to take the risk and catch some of these big moves? You just have to do the math there and figure out, if I always do these big moves and I can get 200-300% on some of these stocks, and that will offset all the ones that I didn't collect my bigger gains on. Think about it. And these ones that are choppy, if I'm always getting in on these, but I'm also getting out at break even, I'm not losing any money every time I do this. Now, yeah, I didn't capture the move perfectly. I might have been up and then missed it. But for the ones that I do capture, these big ones, this is a 300% gain on one position. That'll totally make your gains. You don't need a ton of these to do extremely well. So it doesn't matter how you look at it, but you have to understand that, like, you know, whatever you're shooting for, whether you want to take a bunch of smaller gains and get out early and collect a lot of these, or you want to go for these bigger gains and swing hard, you just have to be consistent. You can go for the Grand Slam and wait for these ones that really take off and hold all the way through. And then have some, like I said, you could have the 5-day moving average breakdown, you know, so you would have got out on this day at 13, or you could have waited until the 10, or until it starts to consolidate and move sideways, whatever your sell rule is. You could trim along the way. They all work. It doesn't matter. Just be consistent, because if you're doing that, you're gonna make a lot of money every once in a while on one of these big stocks. But if you're doing that, you know, like on this one, it starts to pull down, you get nervous and you sell on some of these, like, you're going to start to lose money where you should be gaining money on things, because you're not being consistent with that strategy. Either you're constantly going for big swings, or you're constantly going for base hits. You know, I'm just throwing baseball terms out there. But, like, you know, just be consistent, because if you get a ton of base hits all throughout the year, like let's say you constantly are getting 10% on a bunch of your stocks, that's fine. If you're not getting but you know, and if you're losing little bits here and there, it's not a big deal. Now, if you're breaking even on most of them, but every once in a while you hit the Grand Slam that's like 300%, that's also fine. You know, one of these is 30 of these.
Yeah.
So, you know, it doesn't matter, but just really be consistent. Like, figure out what you are capable and comfortable doing. Like, if you're someone who every time it starts to pull back here, like on this, when this pulls back here and you see it start to approach the 10-day moving average, if you always are panic selling on this day here because it's close to that 10-day and it's right where your break-even point is, then that's probably not a good strategy. You should probably, after 1 or 2 days, just be selling your position. That way you lock it in. You don't have to worry about it. Yeah, you missed the bigger move here, but you're going to do that consistently, and you're not nervous every time, and you're making dumb decisions when you sell, because you shouldn't be. Now, if you're someone who this doesn't bother you, can see it pull back, and you're like, no, I think it's going to keep going, and if it doesn't and it breaks down, it is what it is, and I'll get out then. Then maybe you should go for the bigger Grand Slams. I don't know. It doesn't. You get my point though. It depends on you, and it will work. Just do the math. Like I said, calculate your percentages, calculate how much you're putting up to risk, calculate on average how successful you are and how much you make on those successes, and then you can figure out the numbers.
Yeah.
You know, and then and the bigger thing too is pay attention to your chart setups, because every one of these charts is kind of different. And if you're looking at FTCI here and you see this huge gap up here and you're buying in on this because you think this is a breakout, you think that breakout's the same as like this breakout here, these are two very different stocks. These are two very different charts. And if you're doing that, you're going to be more inconsistent, because this breakout, you know, it goes way up and then comes way back down. It breaks down actually below the lows of that day, so you're going to get stopped out on this one because it's so choppy. So just keep that in mind. Like you know, whether you're going in one of those or you're going in somewhere where these names, I mean, you know, are you you know, has it come up before? Like that's a huge thing too. Like this is why Kalamaji and Pradeep and all these guys talk about this, is because if it's already had one big move up and then pulls back and consolidates, like it's already got the momentum to it. Like it's already on everyone's radar. It's already done it once. Like you're gonna find more success in doing that, focusing on these stocks, than you will on the ones that are super choppy like this, because there's so many times it breaks out and fails. This is a downtrending chart that just broke out. Now, if this breakout breaks above this 740 mark, that's super bullish. That means we've eliminated literally the past year of sellers.
Yeah.
So, you know, looking at 52-week highs, I mean, that's a big one too. You can see stocks that break 52-week highs tend to go parabolically up. It doesn't happen very often, but then, I mean, look at the difference here. Now, this one is one that it did jump at this point. Now, granted, this is you know, this is a different time period for what the stock was doing versus today. But now, same thing, we're down here, and you can see this has had moves up, but then it always pulls right back down. So if you're going to get in on a breakout on a stock like this, well, no, we're in a huge downtrend here, and you probably want to trim this one a little faster, because the chance of this one finally having the return move, it's low. And yes, there's the most volume that it's ever had right here, but think about it. This volume is based, if you look at the dollar weighted average, this stock down here is worth $1, $2, let's say $2. Up here, it was worth $8. So the volume here has to be, this has to be 4 times what it is there to equal the same dollar volume amount. So that doesn't, this to me, even though it's a nice jump and it's on a ton of volume, it's not that impressive because it's done it before, and every time it's done it, it's moved down. And like I said, this is that bearish thing where it's a green candle that barely moved and it's a ton of buying. That means that someone was getting out of the position. There's all these people buying because this guy's selling the shit out of his stuff to get out because he knows this is going to keep going down.
Yeah.
You never want to see a green candle in terms of volume like this, and then like kind of like a losing candle here, because that means that a bunch of people bought and sold this day and no one really held it, and then it just continues to break right down. I mean, this is the first time you see a green candle. I will say what's bullish about this one is this one actually came up, stayed up after all that volume, which means this is probably a lot of new buyers. So does HOLO continue up? I would guess it probably would here. This might be the first time it's reached that real low point and continues up. And yeah, in after hours, it's good. So this one will probably continue to go. Now, don't get me wrong, it's not perfect. I could be totally wrong on that. So once again, that's not like me recommending to buy this on Monday. But to me, that's what I start to see here from looking at this.
Yeah.
MPLN is a good example of where this finally happened. MPLN just had the same thing. It had been in this downtrend. Every time it had jumped, it broke down. Finally, you have that one day where it actually, it's all buyers. Everybody's buying because it pushes the stock price up. And now it's continued up. It struggled a little bit, but it's pushed up, and it's pushed up pretty strong. I mean, we're going from $7.50 now to, you know, it peaked out at $20 yesterday. So you might be able to trade these downtrend charts, but just know what you're getting into. Know what to look for. Like, when you see some of these up moves down, in this area, but it's not on really strong volume, and it's not a candle that just has pushed up all day. That's something you don't touch until all of a sudden you get this. Is this one pushing still? And this is the same thing I said with EVTL is, once again, it's only down a little bit as the end of the time here. Not much volume in here. You can see it's very little volume, which to me still looks bullish. I think this might have another day to run before it starts to, but it could break down too. I mean, this is 3 days of strength. This is why Pradeep always sells at 3 days. I mean, he says 3 to 5, depending on how big the move, how parabolic the move looks to him. And that stuff you'll just have to, you get more comfortable with what it is. I assume what Pradeep and what Qualamaji probably does, because I've heard Qualamaji talk about it during the stream, is he waits until Monday and sees it open, and if it starts to drop, he sells a big chunk of the position right there and then. If it pushes higher, he just holds. So all of a sudden this becomes his big stock that he's going to watch for that day. And that's another thing that I've been thinking about too is, when I'm going in on 3 or 4 stocks in a day, it's a lot to look at. Even though it's not, if you are trying to stay focused on 3 or 4 charts at any given point during a day, it's a lot to check. If you only have 1 or 2 stocks that you're in on, and maybe 1 or 2 stocks in your portfolio have something important going on with them, it's just less to focus on. You can really stay focused on the few that matter to you.
Yeah. That's one thing I have noticed that I need to work on with swing trading, that it gets a bit hectic when the market opens and things start to move, and you need to be a bit calm in the head, and that comes from preparation ahead of the day. I think that you know where to go, you know which one you should focus more on, and you know which one you should drop quickly if they turn out to be bad, so you don't end up looking all over the place and just like a classic case of FOMO and stuff like that.
Yeah, well, like I was saying too, I mean, I think it's really important then to, I like the 5-minute chart for that reason, because just look at the difference here. Look at EVTL. This seems pretty clean. You can really kind of see what's been going on with the stock through the day. But when you zoom in to just even the minute chart, I mean, it's choppy. It is really choppy. It's much harder to follow this. Like, you realize that like on each one of these minutes, this stock was just jumping very quickly. Yeah. And it's hard to kind of follow what's going on. It's up and then it's down and then it's way up and then it's way down, and sometimes it's easier on me to just slow it down. You don't quite grab the moves sometimes, but at least on this chart, I can more clearly see what the stock's doing as it trends through on the 5-minute. And in that first minute, I mean, this one flew up, or in this first candle here. So yeah, you missed that move, but like I said, EVTL is another one of the ones that like this was the 3rd day of a move. So also first thing I do, I see EVTL is moving. I'm going to pull up the daily chart, and really, you should have known this, because if you're following this daily, you would have known that this was a huge mover on this day. So when you see it jump again on this day, if you didn't get in here, you should be hesitant on this day to get in, because it's already made a huge move here. This is already a tough one to play.
You're too late then.
And it's not that you're possibly too late, but there might, like I said, I mean, there's 3 or 4 other stocks that are moving that day that might be your better option than that one.
Yeah.
Like I said, this one's not in the first day of a move. If once again, let's go back to the just the top movers from Friday here. This one, if you had gotten on day 1 on the first breakout, look at your return. I mean, it's way better. Look at your return on these days. If any of this, I mean, you can call this a new breakout technically here. So this isn't necessarily a bad day to get in. I guess you could argue this day it broke out as well. So better to get in on this day somewhere around 1450 if you can. But if you had gotten in on the morning here at 16, 17ish, that's not bad. I wouldn't. It looks to me like this few days here is more of a consolidation. Besides this, I guess I would consider this the first day of the breakout. This is the first day of a breakout, and like I said, these ones are a little tougher to play, but you can do it. But it hasn't ever shown a move, so a lot of these break down. So be very hesitant on these ones. This is why it's important too, because right now I'm showing you a biased list of the best movers from Friday. You should also be looking at the ones that didn't work out, because it's going to let you realize that even though this one happens to break out here, a lot of times this doesn't hold. Now this heavy volume here, that's the one sign that looks good to me. So this one is in play to me just because of that volume. This one, you know, like I said, you're getting in on some of these other days, your chance of getting stopped out's higher, and also you're losing out on a huge amount of that return because you didn't get in on that initial move. You know?
Yeah.
So, and you can see, like, you know, on some of these, if you look back at the chart, you know, day 1, day 2, day 3. If you get in on day 3, look what happens then on day 4 because you're in late. You know? So there's a lot that goes into it, but you know, these are all little things that you have to start picking up as you watch these charts to see what you're going to do. And you know, a lot of these aren't like Hualamaji style. Like I said, a lot of this is choppy. A lot of it's not the stair step. So you know, he wouldn't even recommending to get into any of this. Like this one to me, VLN. I don't know. This is, even though it finally broke out here. This actually, I might have even waited till the end of the day here to get interested in this one, because now it's finally above this resistance level. But this one's so choppy. I mean, you're going to get stopped out of this. You're asking to get stopped out if you go into a stock like this. Not until it has a much more cleaner consolidation are you knowing that the buyer and sellers are clear, and you're not going to get stopped out as easy. That's part of the reason why that works. It's not because of some special magic. It's because that means that all this volatility that's in here is gone. It's mostly just buyers, hopefully, at that point. You know, you can see really, really tight, and then it starts to expand a little bit here, and this is where, you know, as the ADR starts to expand, it becomes interesting because it's starting to break out, and then it does. Now, don't get me wrong, this candle here is a tough breakout because there's all these guys, you know, from this day, for instance, that are going to sell on this day because they finally are going to be able to get out of their positions. And they've been holding since March. So they don't want to be in this. They want to get out. So you're going to see that. But then once again, it shows that it has strength here because it doesn't keep breaking down. You start seeing all the moving averages come up because that means all the sellers are basically getting out at this point. Now you got real buying coming in, and then finally it breaks out. So not the cleanest chart, but like I said, you can look back and you can start to learn from these things, and it can start to make clean. So then on this day, when I start to see that this is coming back up here and it's bounced off the 10-day moving average and it's getting towards the top of Bollinger Band, maybe this candle becomes interesting to you because it might start to warn you there's a breakout. Now, if you can get in on these before it actually breaks out, good, kudos to you because you're gonna kill it. But it's not easy.
Bit of an interesting point on when we talked about the stop losses and stuff. This stock WIMI, in the sheet I'm making now, I have it like it pulls out from all the stocks that I put in the sheet. It pulls out the best performer and the worst performer. And on Thursday, I think it was, WIMI was the worst performer, and then the next day they are the best performer.
Yeah, and you'll see it a lot.
Yeah.
You know,
and that's where you don't want to get stopped out, right? I think you had a minus 10-11% the day before.
Yeah, and you know, it's arguable too that you see in a lot of the breakouts. Like, hold on, let me switch over to the top monthly movers. Let me just find the one that pulls back. So like a lot of these days where there's these huge pullbacks, like this is in this consolidation phase here, and don't get me wrong, this is tough to play. But let's say you did wait until it like broke down and kind of like, let's say you were waiting, you're like, you know what, I bet this drops down and hits like a moving average. I don't think an unsound strategy would be that you put a buy order in here and then you just set a stop loss on that buy order. So if it does continue to break down, oh well, it's not the end of the world. But if this one does recover, you have an entrance now down here, and we're about to break out again. So yeah, there's something to say that on some of these days where like, okay, you know, a couple down days, it touches the bottom of the Bollinger Band there, and then starts to come back up. I mean, if you're able to do that consistently, you can see time and time again, comes down, starts to bring back up. If you're able to time on some of these, it's just tough because there's so many times when it comes down here that it doesn't work out. But if you're setting a tight stop loss down here, you also you can catch some of these huge moves. I mean, you would catch a really huge move here. You're getting in at $1.80 and this goes up to $6.70. I mean, that could be a strategy that would work out. And that's honestly, it's kind of counterintuitive to momentum, but you could do it. I mean, there's all these times. Look at how many times these candles are touching these bottom Bollinger Bands and stuff. That's why I keep this on here. I know you guys had said you'd taken it off yours because it's noisy to you, but it's things I think about. That if you came up with a sound strategy of buying on some of these names as they reach down here, it's tough. Don't get me wrong, it's tough. But on some of these momentum movers where they're holding the end of the day price around the moving average, but a lot of them just keep tapping some of these lower moving averages or the Bollinger Band here, you could set buy orders on here, and yeah, a lot of times it won't even trigger, but if it does trigger, just set a stop loss, so just in case it keeps going, you don't get killed, and then and then you'd catch all this move.
Yeah.
So something you could do. Whether it can be done feasibly well or not, that would be up to you to prove it. This is an example here where it moved up, started moving sideways a little bit, broke down, and if you had set a buy order here, around this part of the Bollinger Band here, I would just argue that as long as your stop loss is tight, you could feasibly do this over time and make it work. There's going to be a lot you get just stopped out of, but it's the same as you do if you're trying to get in on one of these days. Like I said, the biggest thing is just doing the math. If I'm setting the stop loss, but on average I see this many stocks it would work on, and then you just get good enough at seeing enough charts and paying attention to volume and stuff enough that you're able to better pick them. You can hedge the odds into your favor where you're picking enough that are going to outmatch any of the stop losses. And for instance, I mean, this is literally a screener for 1 month gainers. I mean, you look at the consistency of 1 month gainers. If you had bought off Bollinger Band and how these had performed, you would do pretty well. All of these that touched Bollinger Band keep going up.
Yeah. What's your setting on your Bollinger Band again? Is it the standard deviation 12 and then?
Well, it's 2 standard deviations.
Oh yeah, sorry, and then the length is 12 or 15 or?
I'm not even sure, to be honest. 5. Yeah,
5.
It's a 5-day moving average with a 2 standard deviation.
Okay.
And you can play with that. That's just something I throw on. It just helps me to kind of measure the sentiment. I like having a 5-day moving average, and then I like having the Bollinger Band because it really helps me to see I like seeing the expansion. Like as you see this go up and this breaks out here, this really helps you to see the breakout because the Bollinger Band expands so much, and then it helps me to see the consolidation. Even though this looks really choppy in here, the Bollinger Band here helps me realize that even though this is kind of up and down, it helps me to see that this is still consolidating here, and then once again we break out again. So I get it. It's a little noisy, but I actually still like it. I don't take it off.
Yeah, no, I have it on mine still. I just muted it a bit, but I do use it when I look at the charts. I take it on and off. Can just push a button, so I still have it on, but and actually this week something that I've been looking at is to put them back on, and that's why I asked for your settings and stuff, because I've seen different people use a little bit of different things, but I think it just comes out to what you're comfortable with and what you want to, like, what's your purpose with them.
Sure.
So I have been thinking about using them consistently again.
And like I said, there's so many times here. I mean, look at. I've just been scrolling through looking at the charts, but how many times do these come down? They tap off this lower Bollinger line, and then and then it takes a little bit. Don't get me wrong. It's not like it breaks out the next day, But it's then we'll resume the breakout, and now you have a decent entrance
Yeah.
with a really low chance of being stopped out because you already bought at a pretty low amount, and that's just based on statistical standard deviation.
Yeah.
This is another example. Once again, it touched the Bollinger Band here. If you had set a buy there, you're getting in, and now I'm not looking at this because it's 25 cents, but you're buying at 25 cents, and the next, within like 2 weeks, this is at $1.74. So, as
That's
opposed to
before-
you're trying to get in on these days, and it's all over the place, and you end up buying at 44 cents. You know what I mean?
Yeah.
And then getting stopped right out.
It's definitely something to look at when you look at charts now, because then you can enter before the massive volume on these ones.
Yeah, and don't get me wrong, you have to think too. There's Bollinger Bands in hindsight too. Like for instance, on this day, it's lower here than it is here. Like this is at the end of the day. This Bollinger Band forms.
Yeah.
So
but
it's
you
not
do
like,
get a feeling though.
Yeah, it's not like you have this. But for instance, if I saw that this was the down and I saw the Bollinger Band now on this day was, let's say, 23 cents, maybe I set it at 26 cents and hope that it gets close to it but doesn't break through it. You know what I mean? That kind of thing.
Yeah. Yeah. Yeah, something to maybe check a little bit more.
I don't use it personally, but it's something
No.
I pay attention to.
Yeah.
All right, I think I'm gonna call it there.
Yeah, I think I have to go soon anyways, but nice that we got a stream this week, I think, because even if it has a bit been a lot of days that are different, and with the half days open and stuff like that, there's been big movers still.
There always is. What blows my mind is, I would have never thought there were so many big movers. But then, days that the market, like Friday, just got smoked, there's still 12 or 15 stocks you could have been in that just did well.
Yeah.
And are part of an overall trend that in the past few days they've been up, 50% or so. So the opportunity doesn't go away, even in kind of, and we're in, I wouldn't even call it a correction, but just in days, just down days essentially. Not until like we're in a real correction. Would I start worrying? And even like Nasdaq and all that's like pulled back, but like sure, let's just do Nasdaq here. But we're still, I mean, sure, during this period, somewhere in here, maybe this is, as this continues to move down here, you start to slow down your trading in this period. And then as you have, a little bit of an up week, you would start to resume your trading. I don't know how you want to do it. This is just like the kind of general market sentiment thing that, Pradeep and all those guys talk about, because it's really important when you're doing this that like you have to know during some of these weeks where it's correcting like this that it's just tougher. Those are tougher weeks to do it. The odds are going to slowly move against you. You don't want to be taking the risk on those weeks as much.
Yeah.
And then on a week like this where it's just week after week after week, everything's moving, your chance of catching big movers that are moving along with the market, it goes up.
Yeah.
So, all right. Well, thank you everybody. Have a nice New Year's. I doubt I'll be able to stream Tuesday. Sorry guys. I know I should probably just take off that I stream on Tuesdays for now. It probably won't be until the end of January I'll be able to resume streaming during the week. But I will try and keep doing the weekend stream with Johnny.
That would be good enough. I see we got a new subscriber during the stream today, Dane.
All right. Well, thank you for subscribing. We always appreciate it. Sorry, I don't have the YouTube's like hidden in my back here.
I saw we had a little bit of a few were watching, so thank you for everyone who tunes in. We appreciate it, and I remember last year, Dane, in January, we did like a prediction of how we thought the year would be, and I have to say, personally, I missed it completely. BNED screwed me, and Alto screwed me. My other picks, I'm happy with, but they were smaller positions, so it's performance-wise, I didn't live up to my prediction at all. but with the rest of the picks, I'm pretty happy with. So maybe in January when we get the first one, we can try to look into the crystal ball a bit again.
Yeah. Yeah, and obviously BNED was a huge loss for me. And that was after the previous year had been really good, so kind of offset each other. And I lost even more on BNED. I shouldn't have went as heavy as I did, but whatever. What BNED really taught me is to really assess my risk, and since I have assessed my risk, I've just been slowly gaining.
Yeah,
So I'll
that's
take
true.
that as a win for now. Yeah,
Yeah,
I'm not outperforming S&P, but like I just said, S&P was up 27%, and I was up 27% just a week ago. So
yeah,
don't get me wrong, I'm right there, and it's very volatile when you're doing this kind of thing. And like I said, I'm still learning and practicing with things, so it's not like I'm gonna kill myself here to try
no,
and beat a number. But also, mine's in a much shorter time span. You know, S&P's had all year. I've had essentially 2 months to be doing
yeah.
this.
Maybe we
So
can talk a little bit about like the previous year a bit more in detail on the next one, and just some expectations on moving forward, and maybe some, yeah, we did it last year, so maybe we should just summarize the year a bit more detail. And I see James, thank you for the comment. Good info, guys. Thank you, saying so. Thank you for tuning in, James.
yep, thanks, man. Yeah, and if you guys have any questions, please leave comments, whatever. Join the Discord if you can, because a lot of
Yeah,
times on there we try and keep a
we
little more
reply as
intra-week
best.
stuff up.
Yeah, we
Um,
try to reply quickly on the Discord. So if you have some questions, send them to us.
and other than that, yeah, and in terms of making a prediction, I mean, if next year continues to be like kind of an up year, I hope it will be my first real success in terms of swing trading. I would love to hit 100%. Love to double the account
Yeah,
in a year.
yeah,
And if it's a down year, number one, stay profitable, and number two, if it's a real down year, and like let's say S&P ends up like let's say minus like 15%, it was a big correction or something like that. I would still like to hit like I don't know. I'd still like to have like a good return, like 20 or 30% for the year, knowing that it was like in terrible times. Which
yeah,
who knows? Maybe I'll end up just shooting for break even on something like that, because the smarter thing would be to like kind of not trade, and just kind of just keep watching and learning, and during that time, don't feel like you need to go too fast. But we'll see how it ends up going. Um,
yeah.
there'll be a lot to learn. Like I said, it's still a learning process. Um, and yeah, who knows? It's always interesting. That's one thing about the stock market is every day something new.
Yeah, definitely.
All right. Thanks everybody, and enjoy your New Year's.
Bye bye.